look, if it's around there or 26.3, 26.1, I don't expect any reaction at all. If the stock or if the number is way below that, then you might see the stock fall out of bed a little bit. But the expectation is that it's going to be a little bit north of 26%. But again, that is the one metric to watch when the numbers come out in just a few minutes.
And does Elon join the call? I forget. Is he doing that these days?
Well, he says if it's something important to discuss. What else would he discuss? Yes, I think he'll be on the call. If he's not on the call, then I think people are going to say, what are you doing?
Right. Stock still gotten hammered, down about 52% in the last 12 months. Phil, thank you. Mike, how does Tesla look set up here into earnings?
I mean, it's trying to find its footing here in the 140 area. It just seems like a treacherous story here, both for longs and shorts. And essentially, I keep looking at the 3-year chart and how much of a kind of momentum it built up and then lost. So it's still way ahead on a 3-year basis. I think people have to remember that this thing got into the top 20 of S&P 500 weighted companies. It's more than 1% of the market still. Even though it feels like it's done nothing but lose for a year or so.
Well, Tesla is a gainer today, but the Nasdaq not quite getting it done. Looks like it's going to be down again for the second day. What do you see in the internals?
It's very mixed, Sarah, but even at the lows today, it was not really one way to the downside. So take a look at the breadth split. It's now positive. It did turn over the course of the afternoon, almost 2 billion advancing volume, 1.3 billion declining. Net new highs and lows. That's also been a more positive story all month. You're starting to see highs on the Nasdaq outpace new 52-week lows. That's just somewhat the passage of time, but that's how the tape heals ultimately over the longer term. Volatility index really never got rattled today, even when we were selling off, just barely above 20, and here we are back around 19, ahead of some decent macro catalysts potentially coming up in the next few days, Sarah.
All right, as we head into the close, I'm going to go ahead and say that the most important chart today is the U.S. dollar versus the Canadian dollar, which is called the loonie weakening after Canada signals a pause. Its central bank, perhaps a leading indicator for the Fed. Who knows? After a rate hike today. As we head into the stock market close, take a look at where we stand. We're unchanged on the S&P. The Dow is just popped negative. You do have strength in groups like the financials today, consumer discretionary, consumer staples, materials, real estate, and healthcare, all going to end positive. Everybody else is down. Nasdaq Composite down 0.2. Everybody's still up for the week, except for the Dow transports, which are lower now for the week. Amazon helping the Nasdaq, Alphabet weighing the most. That's it for me on Closing Bell. Into overtime now with Scott.
All right, Sarah, thank you very much, and welcome everybody to Overtime. I'm Scott Wapner. You just heard the bells. We are just getting started from Post 9 here at the New York Stock Exchange. And boy, do we have a big earnings hour ahead. Tesla, IBM, ServiceNow, Las Vegas Sands, and other big names hitting the tape any moment now. Our reporters, of course, standing by with all you need to know there. And we're going to show you the stock moves that follow, as we always do. Got some great guests coming up, too. Eric Jackson on the stock he just bought again. And star venture capitalist Rick Heitzman on whether the worst is over for high multiple tech. Boston Celtics owner and investor Wick Grossbeck is with us today on his league-leading basketball team and the top investments he is making these days. We begin, though, with our talk of the tape. A nice fight back for stocks after Microsoft's weaker guidance had the major averages reeling for much of the day. So what now with those other critical earnings reports looming? Let's ask our panel today. Josh Brown, he is the co-founder and CEO of Ritholtz Wealth Management. Stephanie Link, the chief investment strategist for Hightower Advisors. And Dan Ives, the Wedbush analyst who covers Tesla. Josh and Stephanie, of course, our CNBC contributors. It's great to have everybody with us. And we have a really big hour ahead. Josh, size it all up for us and also take into consideration this fight back, as I say, we had today in the market itself.
Yeah, that was really an interesting afternoon session. And one of the people internally was just basically saying sometimes it's as simple as stocks don't want to go down. People should keep in mind where we are seasonally. There's a lot of demand, typically, last year being an outlier. There's a lot of demand for stocks, generally speaking, in the month of January. And we've certainly seen that in prior years. So I wouldn't be surprised to see a month like this normally.
Stephanie Link, how about you? You impressed by this session today? I mean, Microsoft still finished negative, not all that much. Market was able to fight its way back, and now we've got some big earnings looming, including IBM, which you're in too. So it all matters now.
Yeah, well, fingers
got
are
cut
crossed
off
on
in the
IBM. But look, I think today definitely was encouraging action, not only for the market overall, but really tech, because it really got slammed this morning. And I thought it was particularly interesting that the semis, many of the semi-cap equipment companies as well, did pretty well on the day. So basically, I kind of attribute it to, so far, earnings are okay. They're not the disaster that people are expecting. 19% of the companies the S&P 500 reporting, 70% are beating, 27% are missing. The rest are in line. That's pretty decent, right? So for every Microsoft, Texas Instrument, and Verizon yesterday that you have, you also have very good numbers out of D.R. Horton. And talking about housing, which is really sort of interesting, just given the multiplier effect, you had Schlumberger last week, which was really outstanding. Even Boeing, the headline, terrible, but the underlying metrics were very good, free cash flow. Same ditto for GE. So I think it's simply, look, we got overly negative on earnings, and the earnings story is okay.
Yeah, for now. And we've got a lot in front of us today, including Tesla, Mr. Ives, which you call today, quote, one of the most important moments in the history of Tesla and for Musk himself. Why?
I think it's because where we are in terms of Tesla as a company, just had the price cuts in terms of Model 3 Y. What do margins ultimately look like? We've clearly seen the massive Twitter overhang on Tesla, and really this is Musk showing that 2023 is going to be an innovation year. And what do deliveries look like? It's a fork in the road. Tesla right now is in a massive position of strength, but 2023, after a Cinderella ride, finally seeing some turbulence.
I got my eyes tuned right and the moment it happens, and I told you, our reporter's standing by. We're going to jump on Phil LeBeau as soon as that hits and we see the stock move. Higher interest rates, Dan, you got competition. All of those are real legitimate issues, especially more lately, right?
No doubt, but if you look at China and you look at what they've done in the price cuts, so far, and that's been a home run coming out of the gates. That's going to be an important data point. I mean, Phil hit on it a bit, too, in terms of can they maintain sort of margins in a range the street wants to see, called 23, 24% going into 2023.
Well, you used two numbers just now that are below the street, right? Phil used 26%. That's what the estimate is. Isn't, 23, 24% going to be deemed disappointing?
It's really focused. Phil talked about this quarter. I'm talking about guidance for 23. What does margins look like given the price cuts? That's the key. Look, I think it's a seminal earnings for Musk and Tesla, but in my opinion, they further flex their muscles on deliveries. I view it as what's going to be a positive quarter.
What do you make of the way that the stock has come back, right? It's not that long ago we were talking about a $100 stock. And here it is, as it's moving in real time here in overtime. So it's now obviously risen now 145. That's a big move in a pretty short period of time, no?
Well, because it was about the price cuts. Because now you feel like they're defending their turf. Delivery is going to ramp. And also Musk, a lot of the noise on Twitter has started to, ultimately go to the background. And you feel like there's a pilot on the plane again. And the streets liked it. In my view, it's the most transformational company along with Apple in the market.
Josh, what's riding on this here? This stock and these types of stocks have rallied a lot.
I wanted to ask Dan about, I think it was, Dan, I think you were the one that said you think the whisper number for 23 is 1.8 million deliveries. And I think you also would like for them to bring down that sort of casual 50% CAGR guidance to something that's a little bit more reasonable. Can you talk a little bit about whether or not you think that's what's going to happen on tonight's call and what the stock market reaction will be, more importantly, if they do it?
Yeah, Josh brings up a great point because you got to rip the Band-Aid off. It's in the Della 2.0, what he did last night. Cut guidance in terms of deliveries, 35, 40%, because that's a hittable number and potentially beatable, as opposed to 2023, continue to see number cuts. If they do a 35, 40% delivery number in terms of guidance and stock that, in my opinion, is in the green tomorrow.
Well, we're going to see. It's moving a little bit now, trying to figure out which way it wants to go. Steph, I know you're not involved in the name, but it's an important name, just given the earnings reports that you already suggested were better than feared. I think the way that Microsoft reported and the impact it had on tech, which fought its way back throughout this very day. What are you looking for here?
Well, I would simply say Microsoft is more important than Tesla because Microsoft is 5.3% of the S&P 500 in terms of weighting, right? Tesla is less than 50 basis points, so it's not a very big weighting. So that's number one. Number two, I'm not sure all these high multiple or no multiple stocks are going to do all that well, but they're down so much and the expectations are so low. And to Dan's point, it's all about gross margins because they did lower prices pretty dramatically. Did that spur demand or not? It's as simple as that. So I think, I'm not involved in the name. I haven't been ever, actually. But I do think that the valuation is kind of a challenge. The competition is definitely a challenge, and it's heating up in a pretty big way. So I really do think that they have to kind of like knock it out of the park. I am much more interested to hear what some other companies after the close tonight have to say, namely Lam Research, Las Vegas Sands, and of course IBM. I think those are companies where we're going to really listen and hear about trends on the front line about the economy and about the macro as well.
All right, let me get to Phil LeBeau. Sorry, Steph, but I want to get to Phil right now, who's got these Tesla numbers for us. Phil?
Hey, Scott, we've got a beat on the top and the bottom line from Tesla, but it's the numbers within the numbers, and we're going to talk about that with automotive gross margins in just a little bit. First of all, on the top and the bottom line, they earn $1.19 a share, better than the expectation of $1.13. Revenue coming in at $24.32 billion. The street was expecting 24. Excluding zero-emission vehicle credits, was expected to come in at 26.2%, came in at 24.3%. So considerably lower than many people were expecting, which raises the question, how much of this is because of the price cuts, cutting into margins in China? Is there another issue that potentially is weighing on the gross margins? But again, coming in at 24.3%, which is lower than what most were expecting. Most had it at 26.2, 26.3%. Remember, it was 26.8% in the third quarter and over 29% in the fourth quarter of last year. So that shows you the margin compression that is taking place there. Scott, we'll send it back to you.
Yeah, Phil, and I know I'll hear from you again shortly. Just pop on whenever you got something that our viewers need to know about. Dan Ives, you saw the GM number, gross margins, 24.3. I suppose you're going to tell me better than feared?
No, look, what I tell you, I think Phil hits on it. I mean, they're ultimately needing to sacrifice margins for volume. And now the question is, with a price war happening in China, what does the trajectory look like in 2023? Street's really going to be focused on what does that margin level look like in 2023 and volumes. Can you get to a 1.8 and a 22-23% number?
But you said the 23% coming in today was the quote-unquote line in the sand. For you, they exceeded that, even though they're, a little bit below what the street was expecting in terms of 26 and change.
Look, now it's really all about going forward. Can they maintain margins? Because if you look at the price cuts, really started in the month of January, and that's what I view as a moment of truth for Tesla in terms of can they ramp deliveries, which we believe they can, and the scale, and maintain those margins, which are so well above the industry.
And what about a buyback? There's been some whispers around that maybe Musk is going to do a buyback. Do you think there's any credibility to that?
Yeah, I think there is. I mean, the company's in a phenomenal cash situation. You look what's happened to the stock, and there is more pressure on that in terms of doing a buyback. They're in that position. That'll probably be one of the key points on the conference call if Musk and Zach address it.
I think the last time he was asked about that issue, he's like, well, I'm paraphrasing, of course. We consider it, but is he really going to do a buyback in the face of what he has already suggested is a worsening economic picture? Well, that throws a little bit of cold water on that notion. If he thinks that the economy is going to further fall out of bed, why would he do it now?
It's a great point. And that's why for Musk on this call, the reason I think it's so important, it's a tight wire act. How are you so positive on deliveries, which I believe we could be seeing 35, 40% in a dark macro, and also maintaining margins at the same point in terms of what you've exited Q4 at.
Phil, you got more for me?
Scott, they are keeping their projection in terms of deliveries and volume. Remember, they have said for some time, I think about 2 years now, that they expect volumes on an annual basis to grow by 50% over time. Doesn't mean that every single year will be over 50%, but over time, they expect to grow deliveries by at least 50%. They are sticking with that guidance. They are not changing that, and that was a big focus for a lot of people because remember, they only grew deliveries by, I think, 40 or 41% last year, and a lot of people said, look, given the issues, given the questions about whether or not the market is softening, Is it time for them to perhaps bring down that projection? They're not changing that. And by the way, they say that the Cybertruck will go into production as planned by the end of this year, and that on Investor Day, which is in early March, that's when they're going to be talking about their next vehicle platform, which is getting a lot of attention because a lot of people are saying Model 3, Model Y, as successful as they are, when is the next leg of growth coming? And that's likely what? Late 24, early 25, and that's if you have plans that you can put into place fairly quickly.
All right. Phil, thank you for that. I'm going to ask you point blank. Is the 50% number a believable number?
Look, I think that would be very difficult to hit. And this is essentially Musk superhero, like putting on his red cape, thinking that they could hit that 50%, which is a double-edged sword. It shows confidence, but ultimately we believe it's probably going to be closer to 40%.
But, I mean, you said you wanted to see a more realistic target of 30 to 40%. 30 to 40% is not 50%.
Yeah, and
right?
Look, and it's a surprise that they stuck to that. Now, we got to see on the conference call if they sort of fine-tune in terms of if deliveries could be, we'll call it lower in 2023. But no doubt, at least coming out of the gates, this is a confident Tesla in a dark macro, and I think that's the important thing.
Okay, hold your thought for a second. I'll come back to you in a moment. IBM's out. Frank Holland has those numbers for us. Frank?
Yeah, there, Scott. Shares of IBM kind of fluctuating. We're in the green now, in the red, down about 0.5%. The company had a beat on the top line. Profits were in line with estimates at $3.60 a share. Spoke to the CFO about some of these results. Software, the company gets about 40% of revenue. That beat estimates. He said there was actually surging demand going into December for Michigan